Okay, everybody. Good afternoon if you're European, good morning if you're American, and good evening if you're from Asia, Oceania. As the South Americans do, I can say American, right, to the Latinos and the North Americans. They refer to themselves as Americanos, I believe. Fun. Anyway, I hope everybody had a great weekend. I want to start here with gold. I do want to briefly mention the Ukraine war because things are moving very, very fast there. But let's just start with gold. Let's look at some political economy. Here's my Porkopolis account, Kurt Finch tagged. Good old Steve Hanke, who will never admit anything about Bitcoin, is very excited that the totalitarian dictatorship communist state that is the People's Communist Party of China is buying gold. Let's put this into perspective. It is true, and we've talked about this, but I do have a chart here, so let's see how big of a deal this is compared with, say, what could happen to Bitcoin. We'll start with Poland. All right, so we're going to show just world gold reserves now in million of ounces. All right, now tons is typically used. I don't like it because with tons you can't easily figure out the dollar value, but with ounces you can. So just multiply everything here by, now again, this is a little bit delayed. This is September, but $3,800 an ounce. And that's going to give you the value at the time, or, just keep it the same and multiply by $4,200, $4,300 an ounce. It's going to give you the value today in gold ounces. So I'm going to start with Poland, becoming one of the largest economies in the world, 20 largest economies, Poland, over the last 30 years. A great story coming out of behind the Iron Curtain Soviet hellscape, sort of a 50s, 60s, 70s, 80s, as with the Baltics. Grown a lot, gotten richer, doing super well, and buying gold. All right, so here's Poland. 17 million. Not even 10 years ago, they had 3 million ounces. Big buyers. Let's see about, we're going to go to China, but let's just see about Russia. All right. Much bigger hoard of gold, big petro state, but since they started their disastrous war in Ukraine, have not had the money to buy any more. It's possible this gold is already leveraged up in many ways with China, but it's all levered, by the way. But it's a question of how big are your other liabilities. Haven't done anything in 5 years, and quite a bit bigger than Poland. All right, for scale. All right, I'm going to stick with Poland just as our sort of scale here. So let's look at some fun ones. Norway, who, they still have a very strategic petroleum pension fund, which I guess is called like the Green Fund now or something. Haven't held gold since 2003. What about the Canadians? These geniuses haven't held gold since 2002. Actually, about the same, 2003. Now, Norway's better than Canada here. All right, at least Norway has real assets that it invests its oil fund in. Canada does not. So Canada had a couple million ounces of gold, and when the price was $400, they exited. All right. Now let's look at a big European country. Poland, of course, is growing fast and getting richer fast, but it's not a, traditional, let's say, major Western European power. Let's look at France. All right, it's a lot of gold. A lot of gold for the French. I'm layering these, so France hasn't done anything with its gold stock since the GFC. But again, just for scale, you can see how much bigger France holds. Now let's go back to Poland only, and now let's look at China. All right, so it's a lot. It's a lot, and China's growing. How does China, though, say compare with France? All right, so let's take off Poland. Let's look at China and France. There. China's the little bit darker blue on the top, obviously ramping up. About the same. All right, so China, though certainly an economic powerhouse well in excess of what France can do, has about the same amount of gold reserves. And yes, they buy a lot. And yes, Steve Hanke and Peter Schiff get very excited when communist dictatorships buy a lot of gold. But this is the scale of, let's say, a traditional power and a new power. And I'm not saying China's not a new power. They absolutely are. It's undeniable. They have a lot. Let's look at China and Russia together. This is where Russia still has some sovereignty. Comparable. But again, Russia's not growing their hoard. China is. We'll talk about what this means for the gold price, but I just want to show you these things again. All right, let's look at China and Japan. Not looking great for the Japanese. Oh, the Japan did buy a little bit just before the full-scale invasion. Year after COVID. Got them nervous. Let's go back and look at China and the Netherlands. Old traditional power. China's got more. What about India? China's got more. Germany. China's got less. Germany, somewhat famously, repatriated a lot of their gold was stored in the U.S., which was a function of the old gold standard in West Germany, building up some credits after World War II. Their gold was stored in the U.S., and they took a long time, but they got it back inside German borders. This is, again, all of this is, these are what I'm telling you, if you're watching this, is Bitcoin remains superior money. All right, we don't want to repeat what we had to go through during the World War II period. And by the way, Poland, I've said it many times, but if you've forgotten, the story of the Polish gold fleeing Europe is my favorite gold story. I'll just show it again for those that haven't seen it or read it. Chasing Gold by George Tabor. Fantastic book about the Polish gold. And I think going back to 1999 to be consistent with European stuff, but it's a really interesting book, and I highly recommend it if you're interested in sound money, how money had moved around the globe, and contrary to what you might have thought about the gold standard dying, it actually did not die at the hands of Roosevelt. It died at the hands of Hitler and Stalin. 80% of the world's gold made it into the United States' coffers by 1940 because they were fleeing Hitler and Stalin. And I'm not sure gold still solves this problem. You might have better military powers now, but I'm still not sure that, or let's say more sovereignty in Europe. Poland's buying some, but does Poland want to keep all their gold in Poland? I don't know. Have to see. Speaking of Poland, Bitcoin Polska, good afternoon. Congratulations. Congratulations. Always good to accumulate sats and stay calm. All right, so again, just for scale, we got Poland, China, certainly, a huge power, a huge economic power. They got some gold, and they're buying gold. All right. 74 million ounces. Now let's look at the UK. This is another one where they sort of comically failed their citizenry. So this period, I should have this on the chart, but right here is commonly known as Brown's bottom. So as the gold price was literally, it bottomed, the gold price bottomed somewhere, I think it was July 1999, right? The actual full bear bottom. And Gordon Brown, the Chancellor of the Exchequer at the time, was exiting during all-time lows. I mean, just genius moves. And so they went down. This would be funnier even to show you probably earlier on how much gold they had, but now they're down to 10 million ounces, and even 10 million ounces for their citizenry haven't done anything. Where's China in comparison? Quite a bit more. Quite a bit more. And now let's look at the United States, right? In comparison to Britain, China, just these three. Now, I know there's a lot of question marks about the legitimacy of this gold. If it's really there, hasn't been audited since the Eisenhower administration, stays the same. The Federal Reserve doesn't mark this gold to market. They mark it at $42 an ounce, which is the old Smithsonian price. It's possible this gold was lent out rather than still in their coffers. Alan Greenspan in 1996 said central banks stand by ready to sell gold should the price rise. A lot of question marks there. If there's some funny business with this gold, but let's assume it's the same. Could be a big assumption, who knows? China's also kind of murky about their gold, and like Henke was very excited about, it's very possible that they have more than they're reporting. It's very possible we have less. I'm going to say we as with my American hat on now. These are the numbers. But what I want to try to find out still is this price rise justified? Right? And of course, I mean, I'm not one to scream about market manipulation. The price is what it is. The price is what it is. IMF has a lot of gold, right, which is most certainly there. This is U.S. controlled, by the way. This is price, by the way, on this column. I don't know why the axis stretches so much here when I have different things on the left axis, but I have to work on that. Bank of International Settlements says just a little bit. Some weird movements, which honestly I haven't completely looked into. It has to do probably with some SDR evaluations with the IMF and whatever. It's not that much compared to the IMF. But we can do a sort of West versus East thing again, all right? So China, Russia, and North Korea, Iran. It's not gonna have much. Really, these are the only sort of Axis powers, non-free market powers, which I strongly believe in. About 150 million ounces. All right, 150 million ounces. And if you take the free world, which I strongly defend the free world. All right, do this much. We don't need to count the individual European nations. It's kind of weird, but these Switzerland we didn't look at yet. The UK, United States. This is the relatively free world. I guess I could take India out of this. Relatively free world. All right. I don't have a total here, running total, but you can see it's roughly 800 million ounces. Roughly 800 million ounces here. Down, if you look at here, we just from 2000 on that sort of, especially creeping toward the GFC, nobody thought they needed gold anymore. They've been flat since the GFC, roughly. And these sort of less than free nations, sorry, I'm going to have, for my Indian friends, going to count India here, because politically they don't have as much freedom, it seems. But the less than free nations have indeed been buying, all right? But you can see the scale of the difference. Adding India now to this mix, 180 million ounces versus 800 million. So the scale is 10 to 1. Of course, there's a big question mark about the U.S.'s gold themselves, but I'll leave that open for another day. All right, now let's try to answer the question about this gold price rise, how fast it's been rising, if it's perhaps justified. Oh, this is good info. Thank you. Most of the gold is in London and USA. That's smart. I'd say that's smart based on the history, especially based on what Russia's trying to do right now. It's an amazing story. September 1st, the thousands of Nazi planes come carpet bombing Poland. September 17th, Russian tanks move in, and in that month, under the cover of darkness, the central bank, through all of its different branches, took gold in unmarked buses out of Poland through Romania on a train, chartered a mobile from ExxonMobil ship that was in the Black Sea, took it down to Istanbul. The Turks were neutral in World War II. Got it on a Turkish train, even while the Nazis were like right there in Istanbul. Unbelievably, they did that as well in the cover of darkness, and then took it to Lebanon. And then from Lebanon, a French ship took it back to France. But it wasn't over from there because France got invaded in 1940 May. So yeah, it'd be smart for Poland, if it's going to increase its gold holdings, to keep it more decentralized. Right? And you see the scale of Poland's gold again compared to the Axis powers, but Poland's doing great. Poland is a wonderful free market country that's never going to go back under the Russian thumb. But let's try to, okay, so again, main point, Russia, China, India, let's take off Poland because I don't like them in this mix, have been growing. Russia doesn't have any money right now because of their disastrous war, where they could try to get more toilets for 2 and 5 of their populace. But it's just buying. This is buying. So I don't have a chart of it, but I'm just going to read it for you. I've said this before. Even with this mega buying, all right, this mega buying, overall, if you look at the total gold reserves since 2009 March, which was the nadir, the lowest point. Okay, so total gold reserves for the world. Netherlands shouldn't be there. Norway, Poland, Russia. Sweden, Switzerland, UK, US, rest of world. You're getting to 1.2 billion ounces. All right. I know I don't have the total there, but you can see it in the axis. So you see the dip was here. All right. The worst part was here, March 2009, and then the crisis happened. Everybody's like, "Holy shit, let's buy some gold." Now we're at about 1.2 billion ounces of gold in central banks. Remember, this is out of 7. 7 is all the gold mined, but if you remove industrial gold, it's like 6. So it's really like 1.2 billion out of 6 billion available gold ounces is in central banks. And it makes headlines when it grows, but now let's look at the growth rate. All right, and I'm just going to tell you. So from globally, from 2009 March until now, the compound growth is 1.22% per year. 1.22% per year. Keep in mind, gold has been growing at 40% per year for the last 2.5 years. Even 3 years, maybe. Get in on 3 years, I guess. 1.22% per year in actual ounces central banks are stocking. All right, but let's break it down a little bit more. I told you, you saw the charts for Russia, India, China. Those are much faster. So India has been growing about 5.8% since 2009. Russia, since 2009, not since 3 years ago, but since 2009, about 9.7% per year. And China, 8.7% per year. All right, so those are big numbers. Whereas most of the rest of the world, all right, I'm going to take off China, Russia, India. All right, most of the I'm even going to take off rest of the world, actually. You can see it is flat. All right, so we're at like 800 million ounces. We were 15 years ago, and we still are. Still some question marks about that U.S. gold, but that's the number. Now, let's put China, Russia, and India back on. We got the European individual countries off. That's reflected in the euro era, which is a huge figure, by the way, as you see. 346 million ounces. It's more than the U.S. This is the largest gold holder in the world, is the European Central Bank and the euro area. Now let's not go from 2009, but from year-end 2022, which is when the gold price started to rocket. All right, so it's right about here. Let's look at the gold price. Started to rocket. So what has the gold buying been for central banks since year-end 2022? The answer, 1.2%. And since I know I don't have these numbers for you on the chart, I'll get them, but the CAGR from 2009, the lowest point for the world was 1.22%. And for the world, since 2020, year-end 2022, it's 1.2%. So 0.02% less per year globally, actually. Because actually I had this little dip, which I'm catching. But it's less. It's actually less CAGR over the last 3 years than it was over the last 15 years or 17 years. You can split the difference and call it the same. It's the same growth rate. So globally, nothing has actually happened in the last 3 years. Now, let's look at the sort of Tucker Carlson favorite countries, which is China, India. Sorry for Indian friends. Sorry for Chinese friends that lumping you in with the hellscape that is Russia. But it is significant. But let's again look at the differences. As you can see, China's growth rate from the worst days of the crisis, if you can kind of eye this, was faster from the last 17 years than it was from 3 years ago till today. 3 years ago from today, 7% per year. What was it I told you for 15 full years? Close to 9. Close to 9. So 9% CAGR all the way from here to today, 9% CAGR. From 3 years ago, 7% CAGR. It's actually growing at a slower rate, and yet the gold price is going more gangbusters now than it was in 2011. Something to keep in mind. Russia. Russia. My favorite country of all time. How do you think the growth rate over the last 3 years of Russia's gold reserves is compared to since they started going gangbusters with their buying after the GFC? Of course, it's less. It's zero. In fact, it's slightly negative. Negative 0.07%. It's zero. As you can see, they haven't grown their gold stock at all in the last 3 years when the gold price has been going gangbusters. There's been no Russian buying of gold. They don't have any money. It's a hellscape country. They're invading Ukraine, a sovereign country, with all the rights afforded to it in the UN Charter. Russia, by the way, agreed to all borders in Europe post 1989. In 1996, they signed what was called the Big Treaty with Ukraine, which further affirmed its borders. Had the Budapest Memorandum. I shouldn't get on tangents, but Russia hasn't grown their gold stock at all in the last 3 years. They grew it much faster, like sort of a stretched out CAGR, which would be like close to 10% if you look at all 17 years in totality, but over the last 3 years, flat. And yet the gold price is going gangbusters. So we do have China, we do have India growing. By the way, for India, it's a little bit splitting the difference, so it's about the same, actually. Let's just look at India one off. Here's India. So if you start from 12 million ounces for India 17 years ago till 28 million ounces today, that's a CAGR of close to 6%, 5.8%. But if you only look from when the gold price started to go crazy, right, about here, till today, what's that CAGR? 5.7%. It's almost the same. So, as a point of fact, even looking at China, even looking at India, remember, China's is slower too in the last 3 years, and looking at Russia, together, these big bad Axis, anti-democratic, no Republican virtue countries, sorry for the individuals that don't feel that way, but countrywide, their gold stocks are growing slower in the last 3 years than they did over the last 17 years. So when Steve Hanke, who would love, is never admitted, he's been on our podcast, by the way. You can search for it. 2018, maybe. Peter Schiff, they're never going to admit that Bitcoin's a more superior money. They're rooting for these totalitarian dictatorships to buy more because they're clearly the main buyers, right? It's clear. We have already established that in this video. The growth itself from these basket case political systems, again, you can make your arguments about stability of China or India, but I know much about Russia. It's less over the last 3 years when the gold price has been going gangbusters than over the 15-year blended CAGR. And it's less by, 1 to 2 percentage points. Depending on what Russia's less by 10 percentage points, 9. Russia has done nothing to increase the gold stock. That is, be a main buyer, be a big buyer. Right? So, if central banks are the largest buyers of gold, and if our friends Steve Hanke and Peter Schiff like that, I would, pose the simple question to them: why is the price rising so exponentially more than they're buying? All right, it's rising even more than the rise in 2011. Certainly, we can make the case that it is a direct result, right? I don't dispute that. Central bank buying of gold increases the price. Simple supply demand description. And we can just look right here. That makes sense. Gold price went up in 2011. But now, all right, what you see right here is a 40% per year increase from the end of 22 till today. This is that black line is going up at 41% per year, as fast as Bitcoin, by the way, price. And yet the central bank buying is, for Russia, 0. For China, 7, which is less than the fuller window. And for India, about the same, 5.7%. So 5, if you average them all together, which I actually didn't do, but not one of them is growing faster than they did taking into account the full window. And then, of course, if you add in the rest of the world, there's no buying basically at all. I mean, you have this 1.2% per year. 1.2% per year. And that's the same over the 17-year window, 1.2% year CAGR, or from this window when the price started to go back gangbusters, 1.2% per year worldwide. So I ask you again, and I've asked you many times, if the largest single entities that can purchase gold in the world are growing their stocks at or even slightly less than the 15-year average CAGR, not even average, actual compounded growth rate. If they're buying it at the same or slower rates, why would gold price go up 40% per year? Those are markets for you. I'm not trying to justify it one way or another. We can look at the percentile of the gold price in dollar terms and see that it's at the max, the 100th percentile. But this is what I think a more sound analysis of the gold market should do. All right, it makes a lot of headlines when China is growing. You can say it's, buying 30,000 ounces or whatever. But if you back up and you look at the world total, you look at, say, the fact that these aggressive autocratic buyers like Russia, India, and China are 1/10 of the free and democratic world. And unfortunately, I have to use that in quite loose quotes because the West is losing a lot of its freedom and democracy today. And I'm very much a proponent of Republican virtues and democracy. Those are some, I think, helpful questions about how long this gold run can go and if it's actually justified. So that would be my take there. Good morning, NYC Auto. Are you on public transport? Bus, I take it? Or taxi? All right, so I know I don't have a summary for all those percentages. Bottom line, over the last 15 years, what you see here, the total gold for central banks went up 1.22% per year, CAGR, every year. That's the actual number. And from year-end 2022, it's 1.2%, so 0.02 percentage points less, precisely during the time when the price has gone up 40% per year, CAGR. That's the big overall summary. And, for as much as Peter Schiff, Steve Hanke, Jim Rickards, all these gold bugs love to see autocratic dictatorial states buy gold, All right, their buddies, the Russians, aren't doing it at all. And China and India aren't actually doing it even less than their 15-year CAGR. That's the message that I want to tell you about the gold market. This morning, sorry. All right, let's go on the price for Bitcoin, everybody's favorite. Not having as much fun as I thought we'd be having. And I can't tell you how strong this really is, but so far, the 30th percentile is acting as some sort of a support. You know how long that can go. Anybody's guess, but again, by definition, 70% of the time the price is relatively higher. Bitcoin's a volatile asset, although the volatility is well down compared to prior years. Right? So hard to read market. This is way different than here or than any of the last times, as you all know, because we got a lot more institutional demand than we ever did. This is also the one where I'm extremely interested to see where it goes, because we just did a whole deep dive on gold. You know, how much cheaper are we going to give it to these guys? That is Bitcoin to the gold bugs. We've stopped putting in sort of new lows, right? We've driven this zero down, down, down until now about here. Now we're just like the other dollar chart, we're kind of cruising at this level. This to me is so interesting, right? It's like in real estate, we have this thing where you have two governors of valuations, right? So one is the price per square foot if you're in the US, or meter if you're in Europe. And a capital value, also the price per square meter or foot on a rental value, and then also the cap rate. All right, so it's three different governors. You can look at, okay, if this thing expensive for the price per square foot if I wanted to buy it compared to a building or something like that. What about the rentals? Are they overvalued, undervalued? Could I increase the rent? That's another governor in value, is the rental income stream. And then the third governor is the cap rate itself. That is the relationship basically between those two things, the rental per square foot and the cost if you wanted to buy per square foot. So it's three different sort of governors. This is kind of what I'm seeing with Bitcoin now, is we have this gold price, which I think is going to be a new governor sort of how Bitcoin is going to perform. It's not just Bitcoin in dollar terms, it's also Bitcoin in gold terms. And it is just so damn cheap, statistically. In dollar terms, also cheap, but still at the 30th percentile. With Bitcoin, with Bitcoin Gold, it's just, we are bottom of the barrel at 21 ounces of gold for Bitcoin. Yeah, I agree with that. But I also worry, you know, you form these ranges, right? You could break up, could break down. Gold, of course, we can break down always and form lower lows. This is the crazy thing about, how low it is. But with the dollar, we could easily break down again. Of course, we could. So I don't know. It's kind of I think it's a governor. It's sort of the Bitcoin gold versus Bitcoin dollar. You know, maybe Bitcoin yuan at some point. Kind of doubt that, but maybe. They form these different sort of relationships. Got another one which is kind of fun. I don't think I've shown this. Was let's look in. I showed this on a multiple basis, but not with the quantile. So just the inverse, sats per dollar. Remember, 100 million sats is a Bitcoin. So right here in March 2012, you could get 0.2 Bitcoin for $1. 0.2 Bitcoin for $1 in March 2012. And this also should give you comfort, right? Should give you comfort. This is a strong trend, 96% R squared. You see the bands. You see the regression. Oh, actually, I used my old somehow my old numbers got inverted there. It's correct, but the arrow doesn't make much sense there. But anyway, red should be up top now, but that's all right. It's the same difference. We can see where the dollar price is going, valued in Satoshis. Yeah, I think so too. And I know you guys have been asking a lot about charts to see on my site, so I'm working. Nothing before the end of the year, but we'll get some more charts for you to play around with when I'm not filming. It would have been more interesting if I color coded this right, but if you can imagine, well, I don't know, maybe it's correct. It's giving myself a brain cramp, but basically the inverse times 100 million. Maybe it still makes sense to leave the cool areas on the top. But like I said, it is like gravity. So if you want to fight that trend, if you want to try to do what Steve Hanke and Peter Schiff have done for 10 years, be my guest, but this is about bringing trends and the power law to you guys in hopefully an easy to understand fashion. And I think that the trend's pretty clear. So a million sats per dollar is 1/100th, 1% of a Bitcoin. So you could get 1% of a Bitcoin for $1 already here. Actually, that's a trend, isn't it? I was thinking about that in my head because it was $1,000. Yeah, quite on the trend actually. Let's go to the actual price when it was at million here. It's quite a bit back, actually, when I first hit it. And 1/1000th was starting about here. 1/1000th of a Bitcoin in December 2016 for $1. 100,000 sats per dollar. But this as well should just give you comfort, I think. A couple interesting ones, just really quick on what's happening. I'm actually getting some more comfort, even though everything's moving really fast for this geopolitical madness around Russia, Ukraine. You're seeing the Hungarians push back against the autocratic, illiberal democracy, which Orban, who's been in power now for 15 years, has called it. It's pushing back, and unless something happens to this Magyar fella, whose name literally means Hungarian, and his account is clearly shadow banned on X. He only has 20,000 followers, and he's leading by miles in the polls. Could be very interesting what happens in April there. Then it's just wild when I'll read this from Sean Pinner, the woman who referred to Ukrainians as Nazis and constantly regurgitates Kremlin talking points, is now warning Americans that Trump is a groveling servant of a Russian dictator. It's just silly season in U.S. politics, but that's where we are. I have quite a bit of doubt that, very unfortunate for everything in Ukraine, but I have quite a bit of doubt that the Trump administration is going to stop this, because they have to take this deal back to the Russians, who are unequivocal that they just want to keep bombing and throwing meat waves at Ukrainian cities. The only language they know is force. But like all things, economics is the main name of the game, and Russia has no money. So we'll see. Yeah, I want to do an analysis of this too, show you guys in graphical form their fully diluted Bitcoin price. That would be interesting. Certainly incredible. No, he's winning. He's winning. I'm sure you guys saw that he was facing higher than what typical margin calls, right? Was it from Morgan? Yeah, again, I'm not a main follower of all this, frankly, but I'll try to get this charted up better. But let's just read it. May 2025, Jim Chanos goes long Bitcoin and short MSTR. July, JP Morgan raises margin requirements to 95%. I thought there was even more that happened just recently. August, JP Morgan files for a product linked to IBIT. October, MSCI releases consultation note on Bitcoin exposure. October 14th, Morgan Stanley files for a product linked to IBIT. And then November 20th, JP Morgan files IBIT product and revives MSCI issue. So they want MSTR out of the MSCI. And yes, thank you, few. That's the main name of the game, basically. And we saw that they broke the buck briefly. Why is this? So I did break the buck here, which is right around here. And it is scaring them. It's going to be very interesting to see how he responds in total. I mean, I think he can do whatever he wants. He could become a bank if he wanted to. It's all going to depend on their plan. But seeing the Wall Street play dirty with him is also very interesting. Some support. What do you guys think? Where are we going? I thought we'd be having fun here in these levels by the end of the year. I'd say by January, if we aren't over this, I'll call it. I'm still the last man standing that there's possible cyclicality still. Possible. It's hard for me to believe that this is the full cycle, but Bitcoin can trick you. Yep. That all sounds quite reasonable. You know, if it is the cycle and we go down, right, like we've gone down in all prior years, the year after, and this has happened every time. So if Bitcoin again threw us for a loop, and this is the best we got, and then we go down, you know, I would say expect 80, 70, even 70. But 80 is the number. It's hard for me to believe that we could touch 50 or 60 now, but I think if we do, and it's possible, then maybe we bounce back quicker than people would anticipate. You know, taking into account all the levels, the 10 is really strong, right? You can see it. If we put our, I know it's don't trust, verify is our mantra, but if we put some faith in the power curve, you can see how the 10th quantile is strong. All right, it's only been a few times when we really busted below it. And the fact that they're close, the lines are very close together is another good sign. So then it's 70, not even 60. in the near term, like a near term puke, 70, or by next year end, if the same thing happens, then it's 90. So that's why, again, if you don't need the cash like immediately, not financial advice, but I have a hard time seeing it go low and stay low, especially based on all the stories that we just talked about, right? It seems implausible. But for now, it's the 30th percentile. And then with gold, it's new lows every day, but we haven't really hit a new low, so to speak, since a new relative low since November 20th, which is interestingly today quoted there, or that day was quoted here. It's a good view. Yeah, very good way to look at it. Very good way to look at it. You have this, you have this. I think this is the strongest evidence of a pretty strong reversion, right? Especially when you consider, like we talked about, it's only one metric. There's gold buying all across the world, not only in central banks, but these are the most concentrated buyers in the world right here. And all the headlines, like I said, are usually from people that either missed the Bitcoin boat or don't understand Bitcoin. And to say that, China buying 30,000 more ounces in a month is some amazing news. Okay, it's something. But you got to back up and see the big picture here. And as you guys know, Bitcoin's got a lot more upside potential as far as like 0 to 1 than these banks do. Although I can't show you the Bitcoin charts at the moment because I'm still the ETF charts, that is. Anyway, I got a late start today, guys. My family's flying in from the States, so it's going to be busier Christmas season. But I think advice like this is very good. We see what's happening with gold. It's going gangbusters. Bitcoin looks really cheap from a gold bug's perspective. How much longer does that last? Good morning. TV in BC, so British Columbia. It always does. I mean, it definitely always does. Often's a good caveat, but I guess we can say it did not this cycle, but that doesn't mean that it won't in the future. It's a governor. I'm looking at this basically like a governor. Like I said, you have In real estate, you have different levers that sort of constrain value. Price per square foot or square meter, rent per square foot or square meter, and then the ratio of those two things, which is the cap rate after expenses. All three of those things balance things out in markets, and you can see right here how cheap 10 ounces of gold was. And the trend is, even the raw value is double that right now. So just getting much lower just seems very difficult for me to believe. Um, one more for today. We're continuing on here at just, great prices to do business on chain, and nothing that looks like a bubble. Could it have been a top? Yes, it's true that tops can happen during these levels. That's true. But interestingly, other than the halving, you know, this cycle, we have not seen any congestion, which is like top calling congestion, right? I mean, where people are really fighting to get on due to high prices. That's clearly, maybe a little bit here when BRC20 was still like a thing that people thought they want to pay money for. And here, of course, the halving, but certainly no bubblish top behavior. That doesn't mean it can't go down, though. All right, guys. I'll be back tomorrow. But keep it in mind, there's a lot of geopolitical madness in the markets. There's a lot of gold FUD in the markets. I have no problem with gold, but the price is not necessarily reflecting what central banks have been doing. That's my message for today. All right. I will sign off. Thank you for watching. Everybody have a great week. Happy holidays, and I will see you tomorrow.